welcome. You're watching Business Today. I'm Sakshi Batra. Well, ICICI Lombard General Insurance Company, India's leading private general insurance company, has reported its Q4 earnings. And to discuss the fine print and the outlook from here on, I'm joined by the company's MD and CEO, Mr. Bhargav Dasgupta. Mr. Dasgupta, thank you so much for taking the time out and joining us on Business Today. So let me kickstart by asking you first. We have seen some dent on your profit this time around in the quarter, 10% on a year-on-year drop. What has really caused this dent? Are there any reasons that are only particular to this quarter, or is there a problem that could continue going forward from here as well?
Thanks for having me, Sakshi. To answer your question, there are two reasons why the numbers are what you see in the quarter. In terms of growth, we are very happy with the growth momentum picking up. And if you look at our numbers month on month, while for the quarter we've grown in line with the market, for the month of March, we've grown much more than the market.
Okay.
Now, there are two reasons why this has what your question, that you had, there are two aspects to answer that. One is that we had about 27 crores of hit because of COVID wave 3, which is, kind of a one-off compared to what we had the previous year, the same quarter. But the second and the bigger reason is that in insurance, the accounting norm is that when you write a business, when you source a business, the sourcing cost is booked upfront. So you take the full hit of the cost and, including the distribution cost, commission, etc. that you pay, you book it upfront. And the income is taken over the 12-month or the period of the policy, whatever may be the appropriate number. Now, in our case, it's largely 12 months because these are annual policies. So when you have a very high growth in the month of March, you're paying the full cost of the business in that month, but the income gets spread over the next 12 months. Now, when you look at the combined ratio, that combined ratio adjusts for that. So that's why we look at the combined ratio, because that tells you what is a business that you've written, what is the kind of profits that you'll earn over the period. So if you see the combined ratio for the company from, let's say, last quarter, 104 odd percent, this quarter we've come down to 103.
Absolutely. I also wanted to ask you on the elevated operating expenses this time around. Do you foresee the elevated expenses even going forward into the next few quarters?
So the expenses, again, if you look at on a quarter-on-quarter basis, we are seeing a healthy trend in terms of improvement. Again, largely the operating expenses are high because, as I explained, you've kind of spent all the money that you had to in terms of sourcing the business. Earnings will happen over 12 months.
Okay. And so premium growth for you has grown 34% this quarter. Also in FY22, the gross direct premium income is up 28% on a year-on-year basis. Could you share with us the outlook on the premium collections? And are you also looking at any form of price increase for the retail products in the near future?
So when you compare the numbers that you compared with last year and this year, it's not completely comparable because we had the integration with the Bharti AXA business that we acquired. That happened in this year. So that is not in the base, while the Bharti AXA numbers are there for us in the base. So if you take that out, assume the Bharti AXA numbers are added to our base last year, our growth is a shade lower than 5%. So it's not that high as you're talking about. But if you look at the month of March, the growth is very, very good, even with a base added to last year. But coming to your question on the outlook on growth, we are very optimistic. I think one thing that we've all learned is that it's become very difficult to predict the environment given the global uncertainties.
Absolutely.
We're all hoping that pandemic is behind us, but the geopolitics is a new unknown in a sense. Now, assuming that things are similar to what we are seeing globally, and we are obviously predicting inflation, we are predicting interest rates going up globally because of the conflict that we've seen in Ukraine. Keeping that in mind, we still are very optimistic about our growth for this year, both from a top line perspective and profit perspective. Anything new that happens which we are not seeing today is the uncertainty that you cannot predict. So overall, in the current context, very optimistic about our next year. Coming to your question on price hike, look, in insurance, at least in health, which is more relevant for people because healthcare costs have gone up. We don't take price increases just because of one event, which is, for example, in the year gone by, COVID. If you look at the industry, and I want to make this point to all your viewers, we are one industry which took more than 25,000 crore hit because of COVID. That's the number of claims that the industry collectively has paid. We as ICICI Lombard, we've paid about 550 crores, similar to our market share in health. Now, unlike any other industry which has had this kind of a impact, we've not gone to anyone asking for support. We've not gone to government asking for subsidy or some, or some money against this. And by the way, 25,000 crores, if you compare with the industry profits, industry makes about 4 to 5,000 crores of profits.
It's much bigger.
5 years of profit that we've kind of paid out. So, but still coming back to your question, that doesn't mean that we are going to increase rates. At least in ICICI Lombard, we are not looking at retail price hike, because this we are hoping is one-off event. It's not, something that we expect to see every year. What we do look at, however, is healthcare inflation, and that has been elevated, and that is what worries us a bit more rather than just one-off COVID claims.
Okay, so going forward, which segments will be your key growth drivers in terms of, say, revenues or even market share?
For us, we believe health will continue to grow fast. If you look at the year gone by, health for the industry in health category grew at roughly about 25%. For the quarter, number is a bit lower because of base effect. But even with this elevated base, we believe health insurance will continue to grow in India. And we believe that our growth in the health segment will be faster than the industry. Motor, we are a bit uncertain because of this issues with the supply side, which is a bit unpredictable. But we are optimistic that we've had 2 years of very slow motor numbers as a country, fresh motor sales. We are hopeful that we'll see some turnaround this year. If that happens, motor will also start growing well. We are also quite happy with the overall commercial lines business, the corporate segment in India. I mean, the infrastructure investments that we are seeing good growth in project insurance. So all of these lines look positive for next year.
Okay, since you talked about motor insurance, I want to talk about the latest concern that we are all, grappling with, and that is on the electric vehicles catching fire. From an insurance perspective, how are you looking at these instances, and what is going to be a possible resolution here? Is there going to be a major concern going forward, elongated concern, or will this be very easily tackled? How do you really see that?
Sakshi, this is an important issue, but I would want to look at it from two lenses. One is a long term, and we believe EV is a choice for the future. We need to move to electric vehicles. Of course, from a short term, these are issues that need to be addressed, and I think the minister has also talked about recalls, etc. That's the right thing to do. I think we have to design for quality. That's what we as an insurer would want. When these things happen, it obviously comes as a claim to us. Thankfully, the portfolio that we have, and we have a very large share of EV business. Almost a quarter of the two-wheeler EVs are insured by us. We've not had too many cases because we've probably selected the better. We've had one case, in aggregate that I am aware of at this point in time. So we've not had too many hits. But I think principally what you're saying is absolutely important. We need to have quality because this is the choice for the future for the planet. And we have to support this.
Absolutely, sir. Also, since you said that COVID has been a major part of the concern in the last 2 odd years, especially the last year, how we talked about that, such a high portion of your profits, like almost 5 years of profits for the industry, were given away in the kind of, surge in claims and everything. How are you preparing for a fourth wave and consecutive waves? And is that going to be a major unknown that you're keeping, in your outlook, that, this is something that you have to keep aside, that this much hit you could have to give, because of uncertainty?
Yeah. So Sakshi, again, these are things that is very difficult to predict is what we've seen. We are, however, cautiously hopeful, optimistic. And, if you look at the wave 3, while there were numbers, but the severity was much lower. We are hopeful that even if another wave comes, and there are some early signs that in some pockets there are increases, etc., we are watching it very, very closely. But even here, this time round as well, we are not seeing very high severity of claims which needs hospitalization. So one of the things that we did when COVID came in right in the first wave, we launched our home care service. We said that, if you on a cashless basis with our trusted partners, we will provide you home-based care. And that is, I think, a win-win for everyone because no one wants to rush to a hospital unnecessarily. If it's a mild infection, you can take treatment at home. It's on a cashless basis, so that we don't want to have any misuse of the service. But we are happy to provide that, and we would kind of encourage people to take those services if required.
Okay. So as an industry, what is the kind of growth outlook that you have for, say, FY23 and for yourself? If you could share some numbers with us, if you have any projections that you've kept in your mind.
Look, this year, the industry grew at about 11% in aggregate. We think the next year it will be slightly higher than that, but still in the low teens is our estimate because of the uncertainties that we've talked about and the base effect on the health side. Our expectation is that we will grow faster than this. I'm talking about this without the crop, because crop, it's a bit unpredictable because some states are withdrawing from the scheme, etc. But the rest of the industry is what I'm talking about. We expect to grow faster than the industry next year.
Okay. And last question, sir, I wanted to ask you, are there any opportunities in the inorganic space that you're looking at for further growth momentum into your business?
So as you know, we just did one. Bharti AXA business got integrated this year, as I said. We always look at opportunities. If the opportunities make sense for our shareholders, we will look at. But there's nothing that I can specifically talk about right now.
Are there any businesses of Reliance Capital that you would be looking at?
When something, if and when something happens, definitely will share it with you.
Okay, sir. Many thanks for joining us and sharing the insights and the fine print of your results. All the very best to you for the coming quarters as well. Many thanks for joining in.
Thank you, Sakshi.
If you like the video, do like, comment, share, and subscribe.